Hello, traders. It is Sunday morning, March 17th. Happy St. Patrick's Day. Hope a lot of you are enjoying your green beer. It is time for our weekly video. I'm going to start off with my previous picks. We're going to talk about the good, the bad, and the ugly. And then we're going to take a look at what the market conditions are, as we always do. And then I'm going to be doing a little bit of work with some trend lines. And as always, we're going to find some trades that set up well for this week. I'm going to show you exactly the methodology that I'll be using. This is the same format for every single video. When you go and watch my previous videos, they all start off with a review of the previous pick. That is how you can judge the accuracy and performance for all these videos, and more importantly, the system that I teach. And it's not important that I know how to trade. What's important is that this systematic approach can be learned and replicated. So let's get to it. FDX, that was a trade that I highlighted during a live event. You can see that here on Wednesday. The day finished with a bearish hammer, so near the low of its day. You can see that it has leaked lower the last couple of days. In the right hand side of the screen, you're going to see the SPY. This is the daily chart. You can see how the market also has been leaking lower since that Wednesday event. Okay, the stock is basically drifting a little bit lower with the market. I still like it. I like this technical breakout here. If I put up 1OTL now, you'll be able to see the trend line breach. Okay, it's ducked back below it, but it's still above all the major moving averages. It's still above AVWAP-E. So the stock, we can see, has been pulling back and kind of compressing and digesting. It's trying to break out. It's not going to be able to do that without help from the market. So as soon as the market finds its footing, I believe the stock is going to advance and it will be able to get into this gap right here. So what do I do with that information? Well, I click GTC and I can click either on this candle here, or I'm going to click right on the high here so that I'm aware when the stock gets through its high from Wednesday. Then it would become more attractive to me. I'm going to take a look at a couple of other picks from last Sunday's video. mRNA was a stock that I highlighted. That stock shot higher, I believe $13 higher on Monday. We're looking to sell an out-of-the-money bullish put spread, which I'm going to get into market analysis a little bit more. This is a time to really tread cautiously with your swing trades. I believe we're going to get a little bit of a market dip, and we'll get into that in a little bit. The bullish put spread strategy is neutral to slightly bullish. We still expect stocks to move higher. We're looking for stocks that have higher option implied volatility so that we can distance ourselves from the action. What did I like about mRNA? I like this low, higher low, little cup and handle, breakout through this downward sloping trend line, poked above the 200-day moving average, the black line, and that was last Friday. So I did that video Sunday morning, just like I'm doing now. By the way, I have no idea what the overnight futures are going to do. I suspect we're going to see a little bit of weakness in the next week. So I liked all of these factors, and selling an out-of-the-money bullish put spread. The stock did open Monday morning almost where it closed the previous day. So there was a chance to get the spread off, but we're really looking to go way down here and sell an out-of-the-money bullish put spread keying off of the 90, 87.50 level. I believe that's what I was looking at. I'm going to be trying to lean on support, and I'm going to try and distance myself from the action. The concept there is to let time premium decay tick, tick, tick away and work its magic. All the while, the market can flounder around, find its footing, and time decay is working in my favor. And I've got a stock that's actually showing some promise. It looks like it wants to go higher. So I feel pretty confident that this support level is going to hold up fairly well. And so with all the retreating that the market did last week, the stock was still able to hold that 100-day moving average. Would I like the trade as much right now? Well, I'm starting to see a little bit of softness in the market. So until I see how the market opens Monday, I really don't have any need to rush in and do these bullish put spreads. So the market comes in, it finds support at a lower level. Let's say it's around the 504 level on the SPY. Okay, see what the stock has done in that time. Now when the market starts to find support, that's when I'll be looking to enter some of these bullish put spreads. But show me that dang dip. Coin was another one that I highlighted a week ago. Last Sunday, again, we're looking to sell an out of the money bullish put spread. And you can see how the stock has actually held up quite well given the market pullback. I know a lot of you are looking at MSTR. The thing to keep in mind, and it's always important to just look at what the general news is on a stock. And in Option Stalker Pro, we've got a news feed. So you can go in and you can see what the recent news is. If you looked at MSTR, you would see that one of the reasons that that stock has performed well relative to coin is that they are buying a lot of Bitcoin. So that stock is going to be more sensitive to Bitcoin. So when you're looking at it, this is an important distinction because the stock is going to move with Bitcoin, but it has nothing to really do with its technology or its acceptance within the crypto space. It simply is moving with the underlying cryptocurrency. So keep that in mind. As Bitcoin goes, so goes MSTR. And the same would be true for any commodity. Let's say in the energy space, which we're going to take a look at some energy stocks today. They look pretty good. If you're trading Occidental Petroleum, they don't hedge their futures positions. So what that means is that when oil is going up in price, that stock is going to outperform because they don't have any hedges on. When oil is retracing and pulling back, that stock is going to also pull back harder because they don't have any hedges on. So important to know a little bit about the company and why they tend to outperform or underperform, especially when it's related to a commodity. So what is the overall? Oh, I got one more trade. I told you I was going to show you the ugly. The ugly was this McDonald's trade. I had suggested doing a bullish put spread, selling the 290 puts, buying the 287 puts with an expiration of March 17th, and the stock pulled back to AVWAP. No problem. That 290 support level that we were holding on to held fine. So the stock bounces off of it, and then lo and behold, 3 days before expiration, McDonald's comes out and says, hey, our revenues are down, and we feel that there's a soft patch in consumption. Blam. And I mean, they sold the stock off hard on Wednesday. So you come in, you're going to get blindsided by news like this from time to time. It's not going to happen often. If that news had come out this next week, we'd be dancing the jig right now because that 290 support would have held. The spread would have expired worthless. We can't foresee something like that. It wasn't a scheduled news release, so there's no way for us to really plan around it. It's just something that the company came out, they updated their guidance, the market didn't like it, the stock sold off. When you have a week or two left until expiration, there is an opportunity to leg out of these bullish put spreads. I've done an extensive video on it. I believe it was an hour long. It might have been an hour and a half long. If you search for spreads gone bad or how to leg out of spreads on my YouTube channel, you're going to find that video. The two components to being able to leg out of the position are, number one, that you have a strong market tailwind in that direction. So the way that you would leg out of a bullish put spread is you would buy your short strike price back, which happened to be at technical support. Now that that support has been violated, we expected to see buyers there. Now we know that the sellers have overpowered any buyers there. And in this particular instance, we had a news event that also came into play. If you're quick to the trigger, You could have tried to buy in those shorts early in the day on Wednesday, but that posed a lot of risk because you didn't have a market that was also weak at the time. And the option bid-ask spreads widened out considerably once they went in the money, so you really didn't have an opportunity to leg out of the position. And I wouldn't encourage most of you to do that, because on an intraday basis, you have to see that follow-through weakness in the stock, and you have to time it so that you've also got weakness in the overall market. When you have both of those components working together, then you can leg out of the position. This trade, I actually did this trade, and I haven't been very active trading because I've been focusing on education, doing the videos, building out all the features that we have in Option Stalker Pro. So when I'm trading, I'm fully focused on trading, and I don't want to do anything else. I don't even want to do tech support. Somebody calls me with a problem and I got positions on, I don't even want to answer those questions. I just want to trade. I want to watch my positions. So I've really cut back on my trading, but bullish put spreads, for those of you who are looking for a bread and butter type of strategy, they are fantastic. As long as you've got a decent market uptrend, not a lot of uncertainty, not a lot of volatility, it's a great, great strategy to learn. And you're going to have a very high percentage win rate, and you put the spread on and time takes care of the rest. You're well away from where the stock is currently trading. You've got major technical support levels between the current price of the stock and the short strike price. So at those support levels, you're expecting for buyers to step up because they have done that in the past. And so it's a low maintenance strategy. This is the exception. So it's good for me to talk about what can possibly happen. So we had the market actually looking a little soft. And you can see the market gapped down. We had the PPI came out on Friday. We had a fairly weak CPI earlier in the week. So there were some cracks in the dam, so to speak. So what happened on Friday morning was I logged into my account, and lo and behold, I was assigned on my McDonald's 290 puts. Hallelujah. That means that I bought stock at $290. Well, if the stock had gapped down $5, I'd be a little concerned, and I would actually just exercise my 287.50 puts and realize my maximum loss on the trade, which would have been $2.50. Difference in the strike prices, less the credit I received, which is 50 cents. I would have lost $2 on the trade. I would have maxed out. So, okay. But what happened was I got assigned on my position. So instantly I'm long 290 shares of McDonald's. I've already seen the weakness. I've seen the crackdown. Blam! As fast as I could, I just sold my shares right on the open. And then I hung on to my 287.50 puts, and I was able to sell them later in the day, recognizing that we had a weak market backdrop. So I was able to actually make really good money on that trade. And for those of you who did take it, if you followed this, you would have done really well on the trade. So hopefully you got assigned, and hopefully you recognize that you should have sold your shares early and held on to those 287.50 puts, which were in the money. You got the market weakness that you want right here. You got the stock has been weak. And you can see these red candles instantly early in the day that have reversed any kind of gap up. So I'm going to backpedal for just a second and tell you, this was a shitty trade, okay? This was a dog. Not because of anything that went into the trade in terms of the planning for it, why I did it, what I expected, what my market assumptions were. All of that was valid. I couldn't anticipate that the company would come out and lower their guidance. So, it was a crappy trade because it lost money, but I would do that trade over and over again, and I would make money on that trade 90% of the time. So I do like to be very forthright with you. So when I have a loser, I'm going to tell you about it. Unfortunately, I don't have that many of them. So let's get into some market analysis and talk about what's been happening since the FOMC statement that we got towards the end of January in here. This was a juncture where I felt we were going to start seeing some of the profit taking that we're currently seeing in the market. And the reason was we had major news coming out. So we had the FOMC statement, we had earnings from mega cap tech companies, which to that point, before the FOMC statement, we had gotten news from 3 of the mega cap tech companies, and they were not well received. We also had the jobs report coming out that Friday. So we had this confluence of major influences on the market, and we had a really powerful, awesome, great move higher. And I was bullish back then, and I'm still bullish now. But this was a place for us to lock in some really nice gains and to see what the reaction would be. Well, since then, we've been focused more on day trading because we're able to get in on these market dips, run the move higher, and we've been able to do some out of the money selling of bullish put spreads. And so we wait for these dips, and this is where we have an opportunity to enter some of those trades. I think we're going to get another little dip in here, so this will be another opportunity for us to sell some out of the money bullish put spreads. Why do I think the dip is going to be fairly minor? Well, this is still very strong price action, and we can see how every dip has been bought. Every dip has been bought. Every dip has been bought. And instead of going straight up, I believe that we're going to start getting into a little bit more of a normal market pattern right now. In here, we even had the possibility of getting a buying climax with a couple of long green candles through that 525 level on the SPY. That would have been problematic. I've been very vocal about watching for that. That would have also signaled that we need to take gains, and we're going to start seeing some profit taking, and we don't know how bad that backside could possibly be. The market's gotten ahead of itself, so we're going to see profit taking. We didn't get that. Instead, we're getting this same pattern, which is actually quite good from a longer term bullish standpoint. What does that mean, Pete? I'm getting my ass handed to me here. I'm trying to get long. The stocks look good. They look like they're going to break out, and then they back off. Well, what this means from a longer term perspective is that the market's going to start getting into some more type of normal cycling where you get this nice rally, you get a pullback, you get price compression, the bid is confirmed, these gains have held up, and then you get another leg higher. Well, when you get these breakouts in here, this is where you want to be aggressive, and you want to exit those trades once this momentum starts to stall, especially if you have tiny bodied candles just floating higher on relatively light volume. Okay, this is a sign that that move is exhausted. You got in here, you got really nice short-term gains. Okay, take a breather. Wait for the next little drop. See what happens. See how deep it is. Brief and shallow. That's what we want. Okay, you got a almost bullish engulfing candle here. Didn't quite open below this red candle, but for all intents and purposes, you're through the open of this long red candle. This happened to be the FOMC statement and the jobs report and good news from mega cap tech companies. All right, you see that kind of price action, you can get back long in here and you can be fairly aggressive because we've got this really nice, powerful move. You ride it higher. All right, everything's good. Got a little bearish hammer in here. Okay, might not be a bad opportunity off of a relative high with the market closing on its low to start scaling back on some of your longs and see if we get another dip in here. So you're going to see that pattern, and this is probably going to last another couple of days this week. We're going to see a little follow-through selling here. Everybody's going to be watching for the big news this week, which is the FOMC statement. It's going to come out Wednesday. The Fed is going to splash cold water on the market, period. Okay, we've had plenty of time to assess what the Fed is going to do. They are not going to ease anytime soon. And the market's not going to like hearing that news. So would I be super bearish in here? No, God, no. I wouldn't be bearish in here. The economy is chugging along on all cylinders. We have excellent job growth that's good for corporate profits, that keeps credit risk very, very low. So no, there is no flippin' reason to be bearish. But if we want to make money right now, we've got to be patient. We've got to wait for these little dips. We've got to wait for these little pullbacks. And, you know, I mentioned this in the chat room. I think I wrote it in my comments. We are apex predators. Okay? We are going to wait for our opportunities. We are going to wait for these pullbacks in here, and we're going to wait for signs of support. And once we get those opportunities, especially for day traders, we are going to pounce on them when we get these nice bullish trend days. And that kill is going to be very big and it's going to be substantial. And we're going to rely on that. It's going to feed us for many days. You can get into some shorter term overnight positions in here too, but just be ready to take your profits and then wait for the next dip. This is the hardest part of trading. And I know it is because I've struggled with it personally, and I've looked at low probability trading environments. And when I get into a good probability trading environment, I look at the money that I make there, and then I've always looked back and I've gone, look at the money that I just pissed away in this shitty, crappy trading environment. Look at how hard I had to work trading when the environment was good and how much money I made, and look at how narrow the margin for error is. So when you get these nice runs, take your profits, take a step back, see what happens. Eventually, this move is going to get challenged. Ideally, and I don't think we'll get it at this stage, but ideally what happens is you get a run up. You're not missing anything. Compress, 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 compress sideways. That is a really good pattern because it tells you that there's been some selling pressure. You're moving horizontally and you're going to get a breakout because all of those gains have been preserved. It would be similar to what we've seen right here. So you make this nice big move off the low, big gaps. Buyers can't get in fast enough on these gap. So now you're compressing at a horizontal resistance level. There's a horizontal compression. We've had decent volume. We've got decent volume right in here. You can see, so okay, everybody's in the market. Buyers and sellers are active. Buyers prevail. Boom, next leg higher. You can hold through some of these periods, or you can take profits and wait for that breakout. But this would be a more bullish trading pattern. We're not in this leg of the rally. We've already moved very far. So now the price action from here to here, look at the difference between this last month and look at the price action right here. Do you notice the difference? This is tight as can be. And the volume is excellent. Perfect. Okay, buyers are super aggressive in here. What's it like here? Well, the volume has lightened up dramatically, and you're starting to get this patchy kind of movement. Gaps down, gaps up, and just kind of back and forth. It's much more choppy, and you can see that the momentum has been starting to wane in the last month. We're not clipping higher like this anymore. We're starting to see more red candles. So this is all part of reading price action, and it tells you that now that the momentum's starting to wane, we're probably going to see more of a pattern like we've seen in the past. And it might be more like this, where you're moving higher, but dip, support, rally, dip, support, rally, dip, support, rally, stair-step fashion, where you have to time your trades a little bit more. And so when you get these dips, you get these pullbacks, this is where you're more active with your bullish put spreads when you see that support forming, if you're a swing trader. And it'll be good for you to have some of those positions on, because when the market is compressing and you get a lot of these tiny bodied candles, which we're likely to start seeing, day trading is going to become more difficult, and you're going to be leaning more on some of your swing trades. You can get into some of your shorter term call debit spreads. You can buy some stocks that have really nice strength by buying in the money calls that have a delta of 0.75 or higher, that have a lot of time till expiration, that have nice tight upward patterns. And then you kind of ride this move. If it starts to show resistance, you're starting to peel back your exposure, because you know it's just a matter of time until you get another one of these dips. So this is kind of the pattern that I see unfolding, and I believe that we are going to have a little bit of a reprieve in here this week while everybody is waiting for the FOMC statement. Why do I feel the Fed is going to be on the sidelines? Well, we also had some inflation numbers this week. We had CPI and PPI came out, both of them a little on the hot side, certainly higher than what the Fed would like to see. So you've got an economy that is not showing any cracks. You've got decent credit conditions. No reason for the Fed to start cutting rates. You also have inflation a bit higher than they would like to see it. So this week, look for a little bit of softness. What's the reaction to the FOMC going to be? I don't know. I'm suspecting it might pull back a little bit, and then we watch for signs of support and we start taking those bullish positions. Pete, how do I know that this isn't going to be the big one and that we're not going to fall apart? This is what tells me that the selling pressure is going to be relatively contained. When we get that pullback, that's what every single trader starts to think. Here, they're going, okay, Pete told me to be bullish, but to wait for the dip. Pete told me to be bullish, but to wait for the dip. As soon as we get the dip, and I guarantee you, you're going to hear everybody going, I don't know. This is pretty scary. I start reading the headlines and things are pretty nasty out there. They never do the trade here. And then the market takes off and they're like, shit. Damn it. I should have been busy in here. I was waiting for that dip. I convinced myself not to do anything because everything started to look worse. And so now the market rallies up and they're like, crap, I missed a good opportunity. Crap, I missed a good opportunity. So then what do? Well, they're buying into this stage right here. And this is when they're loading up. Okay, everything looks good now. The coast is clear. I think I'm going to get long. Oh, I'm going to get really long. Look at this thing go. And then, doink, the market pulls back and they go, where did that come from? I don't get this stuff. That's the mentality. That's what happens. I'm telling you. This is what happens. I've seen this for 30 years. I've lived it for many years personally. I've tried to help people trade. I've tried to educate them. I'm telling you what your mind is going to tell you. That this dip is going to be something more than a dip. And you will not pull the trigger. Okay. An easy way to pull the trigger is actually to sell those out of the money bullish put spreads on stocks that did not pull back very much. They still have relative strength, and you're distancing yourself from the action. The stock could still come in dramatically, and you're going to be okay because those support levels are going to hold. So that's the way that you're going to need to approach it. There's another way to accomplish this, and this is a really nice way, and I'm going to be showing you how to do that right now. So we know that there should be a dip coming. We've been waiting for these dips. That's the mindset that we're going to be in. Buy the dip, buy the dip, buy the dip. So let's go in and let's set some dang alerts out there. And let's set them on a D1 chart. So if we're looking for a relatively brief and a relatively shallow pullback, that means that if we're using longer term D1 variables, they better be super, super sensitive on a D1 basis. And one of the most sensitive indicators that we use or variables is an HA reversal. Could we use that on a D1 chart? Yes. Another one that we might use is maybe a 3-8 cross. So you get a 3 EMA that moves below the 8 EMA and then the 3 crosses back above the 8 EMA. That would be fine, but not on a D1 chart. You're going to have to go shorter time frame. LRSI. I like using LRSI. I think that's a really good indicator to use. So you want to use that on a shorter time frame, not a D1 time frame. And we can take a look at it. This is also what you can do. This is also what you should be doing. Experiment with this stuff. Don't take Pete's word for gospel. You've got the indicators. See what it's done in the past. I mean, this is a basic part of trading, is going in, trying some different ideas that you might have, and then seeing how they've worked in the past. So, I can go in and we might as well take a look at McDonald's. I'm just going to add LRSI to the mix here, and we're going to go into studies, and we're going to scroll down. And for LRSI, our variables are based on the normal default parameter, which is a 0.5 gamma, and our levels are 20 and 80. This is all standard stuff. So our variables work on that same premise. And so if you look at LRSI, you can see how these cycles actually take quite a bit of movement and quite a bit of time. And so relative to the S&P 500, if you've got a tiny, tiny little dip that you're expecting, this thing's never going to get below 20. And by the time it gets back above 20, you're looking at a substantial dip that would have to unfold where you would be buying into here. I'm not looking for that. I'm not expecting it. You could certainly set the D1, but you would want to set something shorter term like maybe an H1. So now if I go in and I take a look, let's say that I'm bullish. This is a good example. I'm not going to be able to pull it up on an H1 chart, but hey, McDonald's looks really good in here. I think I'm going to buy some McDonald's. I'm going to set that LRSI alert, and when it goes below 20 and then back above 20, that'll be my entry point. Never had a chance. But if I go into an H1, okie dokie. Yeah, on an H1 basis, I can see this thing's got lots of nice movement. Hey, there's a breakdown to get bearish. Ooh, this would be a good bullish one. Right in here, oop, that's a fail. All right, so on these LRSI alerts, they're going to be nice and accurate, and there would be an entry point, and there would be an exit point. There would be a short right in here. Now you get a little bit of a blip here. You can see how sensitive it is to any kind of rise. So if I'm going to be looking at LRSI in particular, and if I'm looking in the case of McDonald's, for instance, what I would like to see is that when it gets one of these bullish LRSI cycles and it pokes back below 80, I would like to be able to look at the previous cycle where it did that. So this is a bullish LRSI cycle right here. Okay, it's above 80. Was this peak in the stock lower, because this is bearish, lower than the peak during this bounce? No, it wasn't. Okay, so I'm not as excited about something like that. If I look at this peak here relative to this one, was it lower? Yes, it was. Okay, this is probably going to be a better short for me then. Was this peak here lower than this peak right here? Yes, it was. Okay, it's probably going to be a better short in there. So that's some analysis that you can do. You can do it on any single variable. So line up those more sensitive variables. I'm going to use LRSI H1. I've just shown you why. And I'm going to be looking for really good stocks. And I'm going to set some H1 alerts on these babies. So let's go through and let's take a look at some stocks and see what we've got going here. Well, the first thing that I can see is XLE is at the top of the chart. Well, this happens to be a ETF for the energy sector, so this is a really nice breakout. Love it. Through this high minus, through this high plus, above all the major moving averages, a little bit herky-jerky. Well, it is an ETF and it is an energy, so it is a commodity, but I do like the breakout. So in the back of my mind, I'm thinking, hey, you know what? If I see some energy stocks coming up on the searches, I'm going to be interested in them. And I'm not trading XLE, but I'm going to show you how easy it is to create an alert. Select the alert type. I'm going to go down to LRSI. I'm going to select an H1 time frame, and I want it to be above 20. So I'm going to come in here and change the value to 20. Click plus, and the alert is set. Done. I don't have to do anything else with it. Okay, if the market pulls back and XLE pulls back a little bit and then gives me a bullish reading, and if this dip was very, very minor and very, very shallow, I know I'm going to have a good trade. And to give you some more information on that, was this LRSI dip below 20? Did the stock price move above this dip when it was below 20? Was this higher than this? Was this higher than this? Yes, it was. Alrighty, I think I like it. All right, so this is where you can take a long position. Force yourself to buy dips. When we get this dip in here and that move above 20 on LRSI, was this dip greater than the one I had here? Chances are, yes, it is going to be. Okay, if the bottom falls out of oil for some reason, don't know why that would happen, but let's say that it does. Red candle, red candle, red candle, red candle. Okay, now I finally get my LRSI alert. I look at that type of drop and I go, I don't want to have anything to do with this thing. No, that is not the move I expected. I wanted brief and shallow, and that's not what I got. No trade. Setting an alert doesn't have any margin associated to it like a position does. It's not a buy stop order. It's simply a reminder that this stock is doing what you want it to do. And then you can evaluate it and take a look at it. There's no emotional attachment to it like there is when you have a position on. So it comes back, finds support. I love everything about it. I'm a little cautious. Pete told me to tread a little cautiously in here. I'm a nervous Nelly. I'm going to sell an out-of-the-money bullish put spread on one of these energy stocks in this sector that probably is going to be coming up in my searches. Okay, that's how we do it. What search am I in anyway? Heavy buying. Okay, heavy buying. We'll go and take a look at stocks that were in heavy buying mode. What a great search to use, by the way, right now, for no other reason than market, gap down, 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 closes near its low of the day. Well, holy cow, if there's a stock with heavy buying and the stock is above its prior day high when the market has finished well off of its prior day high and is finishing on its low, these stocks might have some relative strength. Yeah, they would probably be good ones for me to look at. So I'm just going to flip through them and see what we've got in here. It's too choppy. No, I don't want to have anything to do with that. SLV, that is a silver ETF. I'm not a commodity trader. Precious metals have looked good. Gold and silver in particular have been rallying. Very choppy. Not interested. PDD, I know that's a Chinese stock. There's really nothing that interests me in here. By the way, China has been supporting its market. They have been buying their equities, so that's the reason for the bounce. China is in deep doo-doo. They are in trouble, okay? I'm a little bit worried about what's going on in China, but I'm not going to let that impact what I'm trading in U.S. markets until I see some red candles and a deep dip. And I'm not seeing that right now, and I'm not expecting that. I'm aware of what's going on there. I read the headlines. I've been doing a lot of research on it, and there's going to be some hardship there. I do believe from a credit standpoint that most of that hardship is going to be absorbed internally within China. I think that I'm not going to go into any further details on it than that. So as far as broad-based U.S. bank exposure to it, no, I don't believe that's the case. I believe that consumption in China is going to drop dramatically. And so companies, U.S. companies that do business in China, like Tesla, I think are going to hit a real rough patch. Apple, Nike, Starbucks. Just go in, look, if that's it, if you're interested in which companies generate a big percentage of their revenue in China, well, you got AI. Go in and do some of these searches on the internet and you'll kind of see which stocks you might want to avoid. So, temporary bounce in China. Not seeing anything good there. Would not be interested in those stocks. So this is a nice little breakout here through a downward sloping trend line. Not a lot of strength, some decent volume in here. Cannabis stock, MRO, this is actually nice. Okay, Marathon Oil, they're a refiner, they're in the energy sector. Got this nice breakout through horizontal resistance above all the major moving averages. Got some overhead resistance here with these trend lines that are coming into play. And this is a nice balanced trend line. What does that mean? Well, these are all automated trend lines, and the logic is fairly complicated, but what I have been experimenting with is trend lines where we have a nice middle point. So before the intercept, there's a good amount of distance between the start point and the end point and the intercept. And I believe that that balance actually makes the trend line a little bit more interesting to us. And I have a search I'll show you in a minute. I'm experimenting with it. Every time I show you guys something that I'm experimenting with, I explain to you, I am experimenting with this. You will not see this in Option Stalker Pro. That's because I'm still trying to determine the validity of this indicator. I test, I validate, and only when I'm satisfied with that process do I release something for all of you to use. It could take many months, just like AVWAP-E, AVWAP-Q. I spent probably 10 months running all these tests and working with it. So in any event, yeah, I do like those more balanced trend lines. Back to the point of MRO, could this be my pick of the day? Not as I do this video, okay? Because it's a commodity stock. It's made some nice little stack candles here. It's an ideal candidate to set this freaking alert. So let's go in and do it right now. And then I'm going to be able to look at, I might do two in this instance, okay? So I might do a H1. And by the way, and I'll do a shorter time frame too, since I have LRSI up, let's see how it moves in this particular stock. So stock goes through a bearish cycle. I have a bullish cross here. Goes through a bearish cycle. This is using a M15 time frame. Bullish cycle here. Would this be a good entry point? Yeah, it would be. And you could have made a little bit of money day trading this to the upside when you got that cross. So, yeah, I would watch MRO next week. I think this is going to be a nice entry point. Higher than here. Cool. What's it doing on an M30 basis? M30 basis, it actually just crossed as well, which is what I was going to set. H1 basis, You can see it's still got some more movement to do on the downside before it goes below 20 and then above. And I'd rather see a little bit more of a dip because I'm expecting one in the market. So I'm going to stick with that, but if I wanted to, I could have gone with M30 or M15, given that M30 has already crossed. Shucks, I missed it. Now what do I do? Well, go into the M30 chart. I know that I like the setup here, so I'm going to, I just clicked the wrong one, so I'm just going to click it anywhere. What I wanted to click was GTC. I'm going to click here because I want to know, is MRO going to get above that price? I click GTC. Is MRO going to get through this price level right here, just with some resistance? Is MRO going to give me a little bit of a dip that I might consider buying Monday morning? So I've got upside and downside alerts. I've got this stock pretty well bracketed so that I can keep an eye on it. I've also got a H1 LRSI alert on it. This is one that I'm interested in. I know energy's been relatively strong. I know that the stock belongs to the energy sector, so yeah, okay, that's how I'm handling it right now. Notice I'm not out there placing trades. I haven't seen anything that I would really go gaga over yet. This stock is retracing, okay? Merck might have had a decent day on Friday. Might it bounce a little bit more? Maybe this is just a one-day reprieve and then it's going to continue to go lower. So this is nothing for me to get excited about. MMM had some news last week. Always love this. The CEO resigns and the stock goes up, probably about 15%. Don't let the door smack you in the ass. And if you look at the W1 chart, you'll know why they're happy to let that fool go. See ya. Have a good retirement. Nasty, nasty, nasty. Is a new CEO going to rocket this stock higher? It's going to take time. So I wouldn't get too interested in that. When you see these big spikes in the stock, you should know what the heck's going on. You know, there were no earnings around here. It's in the gap. That's all cool. It's actually filled the gap, coming up on a longer term downward sloping trend line here. So would I be all excited about getting into 3M right now? No. It's going to take time to turn this battleship around. So no, to me, I wouldn't trade it. HAL, hey, I know that one. Energy sector, that's Halliburton. Choppy, choppy, choppy stock. Not as excited about this, but if I'm looking to play the energy sector, I like this MRO chart a little bit better because it had already bottomed out and it had already shown better signs of moving higher. So I'd have to find something better in the energy sector than MRO for me to want to go in and set alerts there. There we go. That didn't take me long to look at that chart. This is your stock. This is your stock pick, okay? Why is this the stock pick? I don't understand. Well, zoom out. Let's see where those trend lines come into play. Okay, that's a long-term upward sloping high plus trend line. That's a decent connection point. We've got good distance in here as well, so it's nicely balanced. It's also getting through horizontal resistance. It's also getting through this nice little downward sloping high minus trend line. We just recently had earnings this week, so the stock moved higher on that earnings announcement. We've seen that this breakout actually happened immediately after that nice earnings reaction. And this was actually the earnings reaction, I believe, before the open, that was after the close. So this is your first date that the stock was able to trade after earnings. Excellent follow through. Stock continuing to push higher when market's been moving lower. It's got all the right ingredients, folks. I like GPS. Would you go out and sell a bullish put spread on this stock using this horizontal breakout at $22? You could. I'd have to look at what the option implied volatilities are on the stock. My guess is that these option implied volatilities are going to be relatively cheap. Why? Because the stock hasn't gone anywhere. Okay? Compress, 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 compress. Boring. That means there's not a lot of movement in it. That means the options are going to be relatively inexpensive. I have this beautiful little breakout. I'm expecting a little bit of a breakdown in the market. Guess what I'm going to do? Yes, I would buy this stock if the market pulls back and finds support after the FOMC and this stock was able to retain all of its gains on any market weakness. Yes, I would be a buyer. So, I'm interested. Very interested in this one. I like it. So I'm going to go in. There's my GTC alert. Maybe I get lucky. Maybe the stock actually pulls back a little bit on Monday. Maybe it opens below here. Maybe it opens below here. I'm going to set those alerts and I'll be ready. I've got it bracketed, and for good measure, I can go in and I can set an alert based on a shorter time frame. So let's go in and use LRSI, and let's use maybe a 15-minute pullback, and we're going to use that same 20 threshold, and we're going to add that. So M15 below 20 and above 20, I'm going to get that alert. And LRSI, look where it is right now on a 15-minute basis. Oh, hey, look, it just has to go above 20. It doesn't have to go below 20. It just has to go above 20, and I'm going to get that alert. And look at how well the stock held up Friday. So what did the market do? Sold off, tiny little rally. This, by the way, was just kind of a classic little head fake in here. So we had a bearish cycle that started right about in here. And I had mentioned to everyone in the chat room, I was like, okay, we've got a bearish cycle. I'm not seeing anything here that tells me that the market's going to lift off. So we're still in wait and see mode. And then we get this nice little rally in here. I said, look, this is not a strong bounce. What's going to happen right here is we're into the gap. We're above the high of the day. And this is a sloppy little bounce in here. We haven't recovered more than half of it. So let this bearish cycle play out. As soon as this long green candle started to fail, I was like, yeah, this is not a good setup here. Now we're back down to the high, previous high of the day, and we start leaking oil around the VWAP. This is when I started telling everyone, we're going to keep chugging lower and probably take out the low of the day. But in general, nothing really to write home about. So in here, I'm telling everyone, yes, we're continuing to move lower, but don't look for any huge meltdown. Don't look for any huge rebound either. And this price action is telling us that. So any kind of weakness, you see the market was weak on Friday. The stock rallied beautiful. It gave back some of its gains, but it still finished very strong and well above its opening price and above VWAP. That's nice. That's a victory. I like GPS. All right, I'm going to click through a couple quick ones here, and then I'm going to show you another feature that I'm working on. I told you I'd show you a little bit of that balanced trend line, and then we'll call it a day here. So we've got our long position. I'm not going to show you any shorts. Okay, I could show you a couple of day trading shorts and how they set up. I just don't want to, because then I've got to review short positions on Wednesday, and I've got to tell you that, well, it would have been a good short position for these 2 hours, but then the market bounced, and I'm not going to do that. No, it's like focus on the long side, sit on your hands, don't trade, wait for that pullback, wait for that dip. That's the side you want to be on. Don't question yourself. Don't question the strength of the market. Be ready to buy. Okay, that's the message. GM. Compressing. Yeah, it's been able to hold up pretty well. It's been able to hold up AVWAP-E, but it's compressing. It's really not going anywhere fast. It had pretty decent volume on Friday. Friday was a triple witch, so a lot of stocks had decent volume. FCX is looking good. It's a gold miner. Gold has been relatively strong. This is a nice technical breakout. This is also going to show up on the trend line search I'm going to show you. Longer term trend line. Decent balance, meaning that this starting point and this end point had a fair amount of time before we reached that intercept point right there. We had a similar situation here. Longer term, this is about 6 months. This is probably what's going to get it on the search because this is very balanced. So I would consider this to be a legitimate breakout. Also, a nice trend line here with good spacing that's going to provide a little bit of resistance not too far from here at the $46 level. So this is a powerful move. This I'm going to respect. Again, commodity based. So commodity stocks, what do? They do a bunch of this. So when I get big directional moves like that, like that, like that, what do I expect? There's going to be some profit taking because it's a jerky, herky-jerky stock. So when it does pull back, if it can hold this trend line, if it can hold that horizontal support, I'll be more interested, but I'm not going to chase it here. All right, a couple more and we're done here. Choppy, 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 trying to get through this. No, I'm not that interested. CCJ is another commodity stock, downward sloping trend line, uranium producer. AG silver miner, yes. So up with precious metals, trying to get through that resistance level. This quick list, I just went through all of them. GPS is your stock. It would take me probably about 2 minutes to find this because I wouldn't be explaining all the technical patterns to you. I'd just be click, 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 alert, 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 alert. It'd be done, okay? So my work is done there. Let me show you trend lines. And let me show you how our trend lines kind of stack up. I might as well use SPY, and I'm going to take off the AVWAP-Q study to clean things up just a little bit. And we're going to go in, and I'm just going to use the 1OTL past. So I offer the trend lines so that you can see where they've come into play in the past. This is important because from a testing standpoint, I could go in and I could see where they were drawn, were they valid, what happened when the stock hit those points, what happened when the market hit those points. And if there is price movement around that intercept, then I know the line is valid. Okay, so I can scroll back as far as I want, and you can see how you've got this nice balanced breakout here to the downside. Could you have made money on that breakdown? Yeah. Any of these, if you start taking a look at them, and we can zoom out on some of these longer term ones, nice, balanced, trend line, yes, excellent signal. Here, we've got another one intercepting right in here. Yeah, these are good, okay? In here, when you start getting a high plus, especially when it's got a fairly steep slope to it, yes, this was nice, this was good, it was confirmation, but you have to be more leery of these because this is more often than not where you're going to see resistance as opposed to a breakout to the upside. These upward sloping trend lines, these high pluses and low minuses, are actually breached with greater frequency. So they're not as reliable. So the trend lines that I tend to prefer are a high plus where you've got a horizontal trend line like this. So if you go back and when you look at the charts using Option Stalker Pro, you've got to go back as far as you possibly can because we use a very large map for these. And so if you go back, but you don't go back far enough, you're going to see situations where you're wondering, well, I wonder why it didn't draw a trend line there. But as you start to look at them, you'll realize that yes, these are major points. Like this trend line right here, really nice breakdown, significant breakdowns with follow through. As you start getting into a situation like this, where very long term trend line, I should be looking for support here. Okay, so it did breach on the downside, but I should be looking for support in here, and you get another touch right in here. So instead of getting aggressively bearish after a move like this, you're thinking, yeah, I didn't know where support would be here because we broke through all those major moving averages, and this is like never land, but you're going to start seeing some of these longer trend lines come into play, and that's going to tell you, all right, this is a place where I need to watch to see if we get some type of V-bottom low off of it. So let's zoom in a little bit, and I'll show you a little bit more on the technical analysis side. So you've got touch point here and here with this trend line extending into this drop right in here. All right, I should be looking for support in this area. And the chart's not going to be anywhere this congested when you look at 10TL now, because you're only going to be looking at current trend lines that are within 5 ATRs. Some of them have been breached, some of them could be breached, but they're going to show you, the reason I show you ones that haven't been breached is because they're coming into play. That's where resistance will be. And so when you start getting into a line like this, so right in here, let's zoom in. Yeah, this is a nice touch point, comes in here. This is a decent little breakout. Okay, well, this trend line that extends in here, it's not even there. You wouldn't even see that. So you just know, okay, I've got a nice little breakout in here. You get long in here, bullish stocks, and then now all of a sudden the market's starting to retrace below it. Okay, you know what? This is not going to get the follow through that I expected off of that trend line breach. Got a nice high plus in here. Okay, you know what? We had the breakout with the long green candle. This is looking excellent. Okay, I've got the follow through that I want. This is awesome. This is really nice. So now you don't have this trend line right here until right here, because that point is still being established. You get a dip, you get a rally up. Okay, now we're breaking out through this trend line. If you go through and you do this type of analysis with 10TL past, I think you're going to be super impressed with how significant these trend lines are. And all you have to do is look, and especially when you start getting these low plus trend lines like this that are breached, and then you get another one and another one, these serve as confirmation. There are many different trend lines that are starting to be breached, no matter how you draw them, no matter how I draw them. Every trader is going to draw them a little bit differently. Institutions may use them as well. The point is no matter how you draw them, there are multiple violations in here, and this is a relatively strong trend that's taking place. And then you'll also be able to see this is a gorgeous little breach right in here. This right here tells you that yes, this is a nice breakdown, but this trend line has been there for a long time. So as nice as this little breakdown was, you get a little poke through right here. You've got to be careful, because this is probably going to be a support level. And boy, oh boy, was it. Because this is where we started to see the November rally that got us here. And along the way, we had multiple confirmation here and here. These are points where you can be adding to your position. Get this compression. Again, I don't trust these as much, but they are drawn, so I wouldn't have as great of inclination to add here as I would on this formation, which is, okay, we're going to hit resistance in here because of that upward sloping trend line. Oh, there's our resistance. All right, now we should start backing off. No, this is the FOMC, and we got what's like a bullish engulfing candle in here and another new high. Okay, I can get long in here day trading. I can get long here day trading, and because of this price action, I may actually be adding some swing trades as well. Shorter term, see how high we go. It's the mode that I would be in right now. So I've shown you how the trend lines are longer term. And what do I want to do now? I'm just going to go into green royal flush, and I'm going to click on some of these. I'm randomly doing this, and I'll put up OneOTL pass just so you can see where they've come into play on something like MSTR. Really nice breakouts in here and here. This is okay breakout. And so you can scroll back and you can look at all of these points and visualize how good these trend lines would have been as a source of confirmation. I've gone in and I've actually redone the way that I draw these trend lines so that there aren't as many of them, and the ones that are remaining are actually quite reliable. So what I've been toying around with is I like trend lines that have been around for quite a while and that have at least a year's worth of duration, at least 6 months worth of duration. So right here, you get this nice longer term trend line in here. You've got one that uses this as an anchor. You've got one that comes into play right in here. So both of these actually have a fairly close intercept. And yeah, I would be all over that kind of stuff right in there, especially below all the major moving averages. That's significant. Stock that's got downward momentum has a nice little bounce in here, is going to lend itself to a bullish flag, and you can see that trend line right in there. See that one? That's nice, balanced. So now I've got multiple confirmation in here. I got it from my major moving averages. I have it from AVWAP-E. I have that confirmation from my upward sloping trend lines being breached. These are low plus trend lines. So checkbox, 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 checkbox. So finally, I've got a search that I'm going to put up, and this is a bull. No, you do not have this search in Option Stalker Pro. You may have it in the future if I like what I see, but you do not have this. If you're admin and you're developing this, you have access to it because you're testing it. So I'm going to take off the trend lines. Let's clear this chart back up, and let's add ABTL. I'll add now because that's what this search is going to actually find, is stocks that are breaching that trend line right now. So these are my search results, and that XOP, another ETF, gas and oil exploration, nice, balanced, nice, balanced. This is probably the one that triggered it. So yeah, now we've got another one, XOP, that's also consistent with us liking the energy sector. SLV, that's a choppy one, but it's going to give me a nice balanced trend line right there, right there, right there. This one comes into play right here, from here to here to here. So it's a nice little breakout, but we still have some upward resistance to get through. FCX, I've already pointed out to you, and you can see how we've got balance here, and we've also got balance to the upside where it's hitting that resistance. Let's see if we've got any on the bearish side, and I'll take a look at that search, and you'll be able to see the same. I have realized that when you get into these patterns, and I call them bow ties because that's what it looks like, they're pretty significant because you've got a confluence of a low plus trend line and a low minus actually intersecting at that same intercept. And they tend to be much more reliable because you've got multiple trend lines that are being violated at the same time. MDB, somebody asked this, I think, during the live event that I did Wednesday. You know, everybody wants me to look at stocks, and I believe they were asking from the long side because the stock was starting to find some support here in Never Never Land. Maybe they were asking me on the short side. I hope they were asking me on the short side. But anyway, this is a nice short because it had broken that technical support. We've seen nice heavy selling pressure. We've seen relative weakness. We've seen good volume. Checkbox, checkbox, checkbox. And now we're starting to break through this balanced trend line there and up in here. Here, here, here. Yeah, MDB is a nice short. Dang it, I told you I wasn't going to show you any shorts. I think I just did. Well, anyway, yes, and this is another decent looking one, but still the 100-day moving average to get through. So out of those, MDB looked pretty dang compelling. All right, so we're going to get into one little final thing, and I'm going to show you what the past ones look like, just so you can get an idea of where these trend lines come into play. And there you can see you've got lots of them coming into play right in here. You've got lots of them coming into play here. These wider bow ties are not as significant as the tighter ones. You see how this is really a big X. So, but look at the quality of those breakouts. Quite nice when you have these balanced trend lines. So this is something that I'm working on. I'm going to continue to test it perhaps within the next month or two. If I like what I see, I'm going to add that as an alternative for you to add to your charts. And also we'll be looking for these searches, and we'll be looking specifically for these breaches. GPS. That is, well, there you go. There's multiple breakouts. There's some really good breakouts, trendline breakouts right there. All the major moving averages, you're above them, above AVWAP-E, you got a nice balanced trend line you're above. Yes, very high probability stuff. So GPS is your pick, and I will see you Wednesday. I would not be shorting in here. We're going to have the FOMC. Very good likelihood that Tuesday is going to be a low probability trading session because everybody's going to be in wait and see mode. Very good probability that Wednesday is going to be a low probability trading environment for day trading. We'll have that big news coming out. We should have some fireworks after the FOMC. I am in buy the dip mode. Relatively passive with any kind of swing trading until I see that dip, until I see that support, until I see the market bounce off of that support. This strength that we've seen in the last 4 to 5 months is what gives me the confidence to buy this dip. And I'm going to be patient because I don't want to subject myself to this choppy bullshit in here where we're up one day and down the next. Low probability trading environment. Be patient, wait for your setup, be ready to strike. You're an apex predator, you're at the watering hole, you're not going to chase squirrels and waste your energy. You're going to wait for the big game to come, and when you get that support off of the next dip, you will be ready to strike because you've set your traps, you've set your alerts, you're ready to go, and those LRSI H1 alerts start triggering on the very best stocks. You're going to be ready, and that is how you're going to spend Monday and Tuesday, finding those stocks and setting those alerts. Thanks so much for watching, everybody. We'll see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.